Okay, well, I'm delighted to be with everyone that's on the line. And you have my bio, but I've been involved in credit for approximately 40 plus years, and I always enjoy doing this particular presentation because I'm going to share the information so that it's also educational for you and gives you some idea on how to speak with students about it. I have pulled some information from a couple of organizations that I work with. One is a credit counseling agency and one is a credit reporting agency. And we want to just talk about how credit impacts every area of your life as we are going through this. As you can see, this little cartoon that we start out with, the good life begins with good credit, and it really does, and you'll see that as we go through this presentation, how it really impacts your life. First slide we have is what is credit? Obtaining goods and services and paying for them at a later date, and such as credit card, mortgages, car loans, and you're going to hear about the car loans later on today, and even service contracts such as cable, television, your utilities, telephone bill, even cell phones, and it's your financial reference. And this particular slide here, I just have it pictures of the different things that credit does and how it makes the world go round. But this particular slide shows you how credit just impacts, the credit report impacts so many areas of your life. Whether you're purchasing a home, renting an apartment, getting a credit card, purchasing a car, cell phone, home phone, just getting a typical loan. A lot of folks don't realize this, especially in the automobile area. They're going to get an insurance score, which is a derivative of the actual credit score, and then even the others, life, fire, homeowners insurance, the utilities, gas, electric. Big one that you want to talk to students about, because so many are going out and getting student loans and borrowing more than they actually should, and seeking employment if they have collections, and that's what I'm seeing. A lot of students have collections, and this really impacts them as far as seeking employment. In 2009, there was the CARD Act that was introduced, and I'll just go over a couple of things as far as the CARD Act. Number one thing there, bills must be mailed 21 days before they are due. Also, college students, when they were going off to college, they were solicited. But this particular bill, it didn't say you couldn't solicit college students, but what it indicates is there must be the ability to pay. And also, one of the other key features in the CARD Act had to do with it has to be in layman's terms, not all of the legalese which we had previously, and the print must be a lot larger. Now, let's talk about some tips for using credit cards responsibly. Credit card debt now is at about $800 billion, and this used to be the biggest challenge for people. I would dare say now the student loan debt is the biggest challenge, because that's somewhere near $1.3 trillion. But let's get back to the credit cards. It is important that you share this with students. They need to understand the credit card terms, and I'm sure when they listen to the purchasing of a vehicle, the same thing will be emphasized, that reading the fine print. They need to understand what they are signing. Do not be revolvers. What that is making the minimum payment. Really, the best way to handle credit cards is the way I handle credit cards, and that is paying balance in full on a monthly basis. Cash advances, once you have credit cards, they're going to offer cash advances, send checks, say no to cash advances and signing those checks. One of the critical things, and we'll get into that more when I talk about the credit score, pay bills on time, stay well within the credit limits. Again, I'll get into that more when I get to the credit score. Monitor your interest rate, review monthly statements to make sure that you are being billed properly. The three national credit reporting companies are listed really by size here. Experian is the largest of the three credit reporting agencies. Equifax is the second largest. That's where I worked for almost 35 years, but now I work closely with all three. And finally, TransUnion is the third credit reporting agency that's used. Credit reports and the importance of them. What's in a credit report? I have a number of items here, but I'd like to go to the next slide to better describe what's in a credit report. The first part of your credit report is identifying information. That is name, address, date of birth, social security number, and normally the employer may even have a couple of employers, could have a couple of addresses if the person has moved around a few times. The biggest part of most credit reports is the account information. And in the account information, you have the type of account, whether it's automobile, whether it's a credit card, mortgage, what type of account it is, when it was open, what is the balance on the account, and the biggest part is how is it paid? Is it paid on time? And it will show that information for 7 years on all three of the credit reports. The next area, public records. I hope no one has public record information. When I get to the credit score, I'll tell you the impact the public record information has on the score. Now, what type of public records? We have bankruptcies, two types, Chapter 7, Chapter 13. 7, you go to court and say, I cannot pay any of this, and that stays on your record for 10 years. The second one, 13, you pay a percentage, and you have a 5-year period that you pay a percentage. Then there are tax liens, another type of public record, child support, another type of public records, and you'll see a few more as I get into how long they stay on your file. Then you have collection accounts. Over 50% of collection accounts in all three of the credit reporting agencies are healthcare related. But these are accounts that have been delinquent. They're going to show the delinquency on your credit report as well as just other areas as far as your credit. And so that's on your report. And it stays on your report again for 7 years from when it was placed on the report. Inquiries, two types. There are inquiries that harm your credit score, and then there are inquiries that are what we call the soft inquiries. The ones that harm your credit score are hard inquiries. That's when you apply for new credit. The other inquiries, when you look at your credit report or when creditors you're already doing business with, look at your credit report, or when you get those pre-approved solicitations. Dispute, I'll cover that later as far as dispute instructions. One thing I want you to remember, and please encourage students, when you fill out an application, make sure you print legibly. You don't want to fill out an application similar to the one that you see on the screen, because someone has to transpose that information, and this is where we get mixed files and confused files in the credit reporting agency. The person who will be on next from the FTC, they, along with the CFPB, are the regulators for the credit reporting agencies, and they enforce the Fair Credit Reporting Act, which governs the credit reporting agencies, because there must be a permissible purpose for credit reporting agencies to provide your credit information to a particular company. They have to check companies out and make sure they have a permissible purpose, and you must have opened an account with them, or they are managing your account, offers of credit, employment purposes. Now, the employment, you must sign something in order for them to pull an employment report. Insurance underwriting, all of the things that I mentioned previously as far as how the credit reports impact your life, that's what this particular slide is about. What's not in your credit report? These companies do not store criminal background information, medical information, buying habits, transaction data, bank account information, or credit scores. That's not part of your credit report. Now let's talk about some common myths. When paid, and I have people ask me this all of the time, well, when I pay the bad debt, will it go away? No, I'm going to show you in a later slide how long it stays on your credit report. Credit reporting companies denied me credit. No, they just provide the information to the creditor. The creditor makes that decision. I'm not responsible for those charges on that term our. If you have a joint account with either a spouse or a family member, you both are responsible for those accounts. This is the biggest one I get when I do presentations, because the majority of the participants in presentations I do are women, and they always ask, why is it I'm still responsible, even though the judge told me he was supposed to pay for the accounts after we got divorced? But if you don't get it separated, then you still are both responsible for that account. Consumer must give their permission for report to be issued. That only applies in the employment report. You must give the permission. You must sign a document there. Requesting your own report and pre-approved offers harms your credit history, and as I said earlier, no, that does not. That is what we call a soft pull. There is only one credit score. No, there are hundreds of credit scores, and so don't let anyone tell you that there's only one credit score. Here's how long information stays on your credit report. Open accounts in good standing indefinitely. Close accounts in good standing 10 years. Late or missed payment 7 years. Collection account 7 years. Civil judgment 7 years. Chapter 7 bankruptcy 10 years. Chapter 13 bankruptcy 7 years if you keep the payments that are designated by the court. If you do not, that can stay on even longer. Unpaid tax liens 10 years. Paid tax liens 10 years. Credit inquiries, the one that are the hard inquiries that impact your credit score. When you actually apply for something, they stay on for 2 years. The soft inquiries stay on for 1 year. Emphasize this with students. The credit report is free, and you can get one from each of the credit reporting agencies once every 12 months. But you can get free copies of your credit report if you are turned down for credit, if you're not offered the best terms, and again, the only place you should go to get your free copy of your credit report is www.annualcreditreport.com. And the best way to get your credit report is via the internet. Now, it is important that you enter all of the information correctly and that you use only one address. People move addresses around, and if they have rental property, they fill out application, use the rental property address. You must use what is on your credit file. Otherwise, you will have to mail in information that shows that you are who you say you are, because they are going to take you through an authentication process when you solicit your credit report. There could be a fee for the credit score, but there are many ways to get credit scores. If you have Discover account, Ally account, many of the different accounts that you already have, most of them now are providing you with a free credit report, credit score on a monthly basis, and that's the best way. I don't recommend, although it's nothing illegal about it, a lot of advertisement for Credit Karma. That is not a source that I recommend. I want you to really talk to students, and I'm sharing with you, beware of credit repair companies. There are two types of companies. There are credit counseling agencies. Those are reputable, and they are through nfcc.org. But then there are those that advertise, we can get you out of debt, we can settle everything. They cannot. Do not utilize those companies. Utilize only reputable credit counseling agencies, and there are, I recommend going to www.nfcc.org, enter your city and state, and they will tell you where the reputable credit counseling agencies are, because these credit repair companies can't legally do anything for you that you can't do yourself. And do not ever utilize a service where they're going to charge you a fee up front. So it's really important to understand this. Now, the dispute process here, credit reporting agencies, as I said, they are going to verify that you are who you say you are. If you dispute different items on the report, give them at least 45 days to get back to you. Make sure you have good documentation. Make sure you keep the documentation forever, and after you dispute items, you can go back and get another free credit report. Now, the last part of what I'm going to cover in the presentation is your credit score. The credit score that we're going to focus on is the FICO score, which has a range of 300 to 850, and this is what most creditors use now. If you're applying for a credit card, they're going to pull the information from one of the agencies, but if you're buying a house, they'll pull all three and they will average them, and this is really just a model and you'll understand it a little better. There are two scoring agencies. One is Vantage Score, and again it's 300 to 850, but their model is a little different. I'm not going to focus on them at this time because most creditors are still using the FICO model, which I will break down for you as to how it works. The biggest part of your credit score is the payment history. That's 35%, and that is how recent did you miss payments, how long have you missed payments, and how severe are you. The thing that I want to emphasize here is that payments should be made on time, all the time. I will show you how that hurts your score in a couple of slides. Key factors in the second area, that is debt. That counts for 30% of your score. It's credit card debt, installment debt are the two major items here, but the credit card debt actually counts more than the other debt. Let's give you an example here. Let's say you have 5 credit cards and you close out a credit card because you went to somebody and they said, oh, you need to close out a card. But look here, you have balances of $7,500 both times. Look, when you had the 5 cards, you had 30% of your utilization, but when you closed a card, you now have 50% utilization. That's going to lower your credit score. You want to keep your credit card utilization to 30% or less. The folks with the highest credit score, they have a utilization of 10% or less. The next area, 15%, has to do with length of history. You do not want to close out, especially credit cards. Now, installment loans and all of those, they are going when you pay the balance in full. That's your car note, your furniture bill, your house note, on and on like that. Those are installment loans. When you close those out, that's okay. But credit cards, if you've had a credit card for 20 years and you close it out, that hurts you in this particular area here. Now, if you've had a short period of time, it has limited impact on you. The next area is new credit. Know this, every time you apply for new credit, it's going to lower your score a little bit. It won't impact you a lot, and just that inquiry. And then you want to have a good mix of credit. You want to have some revolving, that's credit cards, installment, and it's also good even to have a mortgage loan. Look here at how the credit scores are distributed. 800, that you'll see there in bands. 800, what percent of the population has that? Majority of people, 750 to 799, 700 to 749, and then you can see all the way down. But let's look at this. Chance of 90 days past due or worse in 2 years. You see the folks with the highest credit score, they have less of a risk there, but you can see as you go down here how the credit score really predicts how these people are going to behave. Also, talk to students about this, how the credit score causes them to pay more if they have a low credit score. A person with a 590 credit score versus a person with a 720 credit score. They have a $10,000 car loan, 36 months. Look at the difference in the payment, and over the period of the 3 years, the person with the low credit score is going to pay $2,304 more. This, again, is what I was talking to you about, credit scores. We have a person with a 680 credit score and a 780 credit score. If you max out a credit card, it will drop your score 10 to 30 points if you have a 680, 25 to 45 points if you have a 780. 30 days late, down 60 to 80 points, 90 to 110 points for the 780. Debt settlement. People always talk about, well, can I settle the debt? Yes, you can, but it's going to impact your score. 45 to 65 for the 680, 105 to 125 for the 780. Foreclosure, 85 to 105 for the 680, 140 to 160 for the 780, and finally bankruptcy, 130 to 150 for the 680. It drops your score 220 to 240 for the 780 credit score. As I close, rule number one, you need to have a credit history to get new credit. Creditors need to know whether you have good references or not, and some potential options for students as to if their parents have good credit to get on as an authorized user or get the parents to co-sign for them. This is something to really emphasize. It is always critical to pay as agreed. You saw on the previous slide how important this particular area was. Credit cards, really your best way of really building credit and getting a good credit score, because we know more about you based on a credit card than any other debt, because credit cards, the balances go up and down. Car note, it doesn't go up and down. Mortgage note, on, but credit cards tell us a lot about you, and so that's one of the reasons when I talk to people, tell them to get a credit card, use it properly, get a second one. I always recommend, if you can manage credit, get at least 2 credit cards, and I ask people to get them without that so they don't have fees. The next area, use caution in a closing accounts. As I mentioned earlier, it is really important to keep good accounts open. Just use them a little bit. But here's the thing with accounts. I want you to get used to paying balance in full. Emphasize with students, I emphasize with you, use credit but pay balance in full. One of the other reasons I'm doing this presentation, my credit score on a monthly basis is anywhere from 835 to 850. This year I've had an 850 credit score about 4 or 5 months out of the year. Rule 5, apply for credit judiciously. And again, emphasize with students, if you apply and you are turned down, you need to find out why you were turned down. Sit down with a banker and have them to explain the information to you, because if you just continue to go and apply, every time you apply, you lower your credit score. So you don't want to just go and continue to apply, because that hurts your credit score. Again, stability. Make sure you pay your bills on time. Keep a sound financial record. Stable employment is really important. Even stable addresses. All of these things they are looking at. That's not a part of your credit score, but it is part of how creditors look at you. Have a plan. And again, emphasize with students, I don't do these presentations in person unless I do a budgeting plan. This is the reason so many people get into credit trouble. They don't have a budget, and it is so important to have a budget and to pay bills on time all the time. And then my final slide here, it is so important to teach children about money, the value of money. We at Jumpstart, which is where Hillary and I know each other through, there's a booklet that came out, How to Raise a Money Smart Child, and that is how at different ages young people need to learn about the importance of money and money concepts and everything. So that's the end of my presentation. I hope it's been beneficial to you.
Phil, thank you so much. We had a couple of questions come in. Any of our other participants that have questions can continue to post those in the question tab. But one piece of follow-up and clarification, I guess, first, you mentioned CFPB. I just wanted to clarify for folks that that is short for the Consumer Financial Protection Bureau. We had a question, why is it that you like getting them the credit reports best by email?
It is faster that you can get the information so much faster and easier by email. You're not going to be able to call the credit reporting agency and get someone. You are going to have to leave information, but now with the latest technology and everything, it is just much more efficient to get the information via email.
Great. Another question, how long will closing a 20-year-old credit card affect your credit score?
20-year-old credit card, it really depends on what their other mix of credit cards is, and also what was the open line on that credit card. If it was $1,000 as far as the line, and the person has maybe $35,000 and they don't carry any balance, it will have minimal impact on them. But if it's a 10,000 line and they only have 20,000 available to them, and then they have a balance of $5,000, now they are at 50% utilization. So that really has an impact on them. It just depends on how much credit card debt they have, and then also how much credit are they actually carrying. So that's how I hope that explains it for the person. If not, they can send a note, and I'll be glad to elaborate on that again.
Great. One other question from one of our participants, is one credit reporting agency better than another? That might be a loaded one for you.
It depends on where you are. That the credit reporting agencies do have stronger areas. They are stronger in certain areas than other ones. For instance, Equifax is the strongest of the credit reporting agencies from Maryland south, all the way down to Florida. And here's why. They acquired all of the credit reporting little bureaus years back, so they have a stronger database there. Now, when you go north, New Jersey, Pennsylvania, New York, all of the Northeast, it varies. I can't tell you which one is stronger there. They're probably about the same. But if you go to the Midwest, TransUnion is the strongest in that part of the country. If you go to the West Coast, Experian is normally looked at as strongest. And creditors, it's not a tough question at all. Creditors look at the three credit reporting agencies, because when you apply for a car loan or if you apply for credit cards, they are only going to pull one credit reporting agency, and they have criteria that shows them based on the state and everything which one has probably the best information on the consumer.
Well, thank you, Bill. I really appreciate it. And by the way, your comment of several months at 850 is inspiring. My husband and I are still in a monthly competition. I last month was beating him by about 7 points, but we have not yet seen 850. You've given me something to continue to aspire to.
Well, my wife and I, it's interesting. My wife and I compete also. And the month I got the 850, she had 849.
We go back and forth. It's always funny. I say it has a little bit to do with the day of the month and when our various payments come in. So
that is correct. That's why you will have different credit scores really on a daily basis. It's when information is reported, when you make charges and all of that, because even paying balance in full on a monthly basis, you're still going to have different utilization factors on your credit cards. But I tell people really anything over 750 is really a very good credit score, and I talk to students about it. I actually break them down for students into A, B, C, D, and failing grades as far as the credit score.
well, thank you, Bill. That was a great presentation. I appreciate your time, and we'll see you again this evening.